Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's panning out to be a great Friday of sorts, 228 points higher in trade. 24,800 is with us on the Nifty. We've managed to stay above these key levels for a fairly long bit throughout the course of the session. All the sectors barring Pharma are up and about in trade. We have most of the stocks, almost 47, 48 stocks on the Nifty that are holding up as well. Many sectors, small pockets, broader markets, everything is contributing to the move today. So we'll try and understand from our guests as to how do you navigate through these fresh moves in the markets. Let's actually welcome our guest on board. We are now joined by Mr. Abhishek Basu Malik, who's with us on the program to help us, with his guidance. He's the co-founder and fund manager at Sri Rama Managers. Warm welcome to you, Mr. Basu Malik, and thank you so much for joining in. Let's actually start off with the macros and then we can come to the micro front as well. Globally, of course, it was the geopolitical tensions. Before that, it was tariffs, and now it's the fresh spike in the bonds that we are seeing at this point in time that is being seen as the key overhang. Fresh tax bill being seen as now at least pass in one of the House of Representatives there. How are you looking at these fresh, probably overhangs that are coming in onto the markets? Does an Indian retail investor really need to pay a lot of heed to all of this, sir?
So, first of all, good afternoon to you and all your viewers. See, I think there'll never be a time when then there's not going to be some kind of negative macro news somewhere in the world. There's always going to be something or the other going wrong somewhere or the other. What we have to really sort of figure out is if there are any big events or big problems that are out there, which actually, if you see, was there over the last, say, 6 months, right? You had a change in the US presidency, US being, pretty much 1/4 of the global GDP, drives a lot of, liquidity in global markets. So any significant economic, political, policy changes in the US has a downstream impact across the world. So that was there. If you see globally also, so the impact of tariffs, impact of, bonds, etc. was there. And it's not that it will go away. If you remember the last time we spoke, maybe I think a couple of weeks back,
yeah,
I mentioned that by, say, end of June, which is probably another month from now, what is going to most likely happen is the rate of change of all of these things is going to go down, right? So the frequency of announcements and tweets by the US president and all those things are going to go down. And that is precisely what's happening, right? So previously you were seeing every 2 days some tweet saying that, this tariff, that tariff, that is now sort of got subdued. Now, once that happens, markets, business, investors, everybody sort of takes what, is currently, the policy or the direction, and then sort of, factors that into their judgment. And that is what I think is happening across globally in the markets. People are pricing in their, what they feel is going to be the next year, 2 years, 3 years down the line.
Along with the kind of uptick that we are seeing in bonds, I wanted to understand a bit on the foreign flows front. Now, historically, what we have seen is that a spike there leads to FII flows out of India or emerging markets, but this time the dollar is not strengthening, sir. So there is this dichotomy. I wanted to understand how are you looking at the fund flows in that aspect? How are they going to navigate themselves?
See, I think one thing is pretty clear, is that there is going to be funds outflow from the US in the medium to longer term because of, whatever it's being termed as the end of US exceptionalism or whatever way you term it. The fact is that, and fundamentally also what we are seeing is that by design or by whatever, means, the current regime in US wants Europe to sort of fend for itself. And so what is happening is Europe, large countries in Europe is going to start spending a lot. So you will see funds flowing out of the US. Uh, so once funds start flowing out of the US, uh, where do they go to? A large amount of money is not going to go to China because of geopolitical reasons. I'm not saying that a large part is going to come to India. I'm saying that
Okay.
some part will come to India, right? A large part will go to Europe. A large part will go to other emerging markets. Some might go to Japan. We don't know, but we should not expect that India is going to be the default choice because we are growing, etc., etc. I don't think
Correct.
that is going to happen. Uh, in the minds of global allocators, India is not a story which is uh, you know, uh, which is like 100% given, right? That they have to come and invest. It's only we Indians, who we think, and that's true for all countries, all investors. They have a home country bias. We think that our country or the markets we are familiar with is where we should be investing. I think the same goes across the world. So globally, I think liquidity wise, there is going to be an outflow from the US. Uh, I am expecting at least a part of it to come to India. And once some part comes to India, if you see, in the last, I think, month and a half, uh, the FII flows have actually turned, decisively in favor, right, in India. So which is a welcome sign, right? So that's something that we have to, really look at.
Absolutely. Now, also help us understand back home, sir. Then, looking at the kind of recovery that we have seen in the stock markets from the recent lows, earnings are largely out of the way as far as Q4 is concerned. What is it that has stood out for you in terms of any performance among sectors, themes, or stocks that you would now look at, sir?
So I think a lot of sectors have actually done reasonably well. If you look at, overall, I think there's been very good growth in, sectors like finance, fertilizers have been standing out. I think insurance companies have done pretty well. Uh, a large part of the engineering, infra-related ones have done well. So overall, I think we've been actually, we had a pretty decent earnings season compared to what I think we were expecting. I think at least I was expecting a much more subdued kind of earnings season, but I think we've got fairly good growth. Even I think pharma has done quite well.
Absolutely. So within pharma, since you say, I wanted to talk about Sun Pharma that's come out with the results today, and I also wanted to ask you on the Midcap Pharma that has been probably something that most analysts have been looking at of late. How are you navigating through the fresh moves here?
So I think pharma, we have to be, very stock specific. We cannot
Okay.
just say that it's not a overall sectoral call, right? You have to be specific on a particular company. And overall, I think especially domestic facing pharma uh, looks quite good. The entire CDMO etc. space looks quite good. Uh, the the US tariffs on pharma, which is probably an overhang to an extent, I think that give it some time, and I think that will be positive for India
Correct.
because most of our pharma companies are in the generic space. The problem in US medicine pricing is in the patented molecules where the prices are just multiple times of what it's available in elsewhere in the world. So I don't see a major problem with the generics that India produces because that is anyway the cheapest that is available there, right? If the focus of the government is to reduce their, medical prices, I mean,
Yeah.
cost of drugs, that is the least that is going to get impacted. In fact, over say the next 2 to 3 years, it actually can happen that they might actually get benefited.
Okay. Okay. So that's pharma. Talk to us about IT, sir. What's your fresh view here? We've seen earnings are out of the way. We're also seeing what we just discussed, what's happening in the US, because that's their largest playground. What's your fresh approach? We did see some bounce coming back after the earnings for large part. Even today, IT is one of the top movers. I mean, Infosys, HCL Tech, TCS, they're all moving in. We're also looking at mid caps like KPIT Tech coming back in flavor. Many other such stocks, Coforge, Persistent, erstwhile favorites are coming back. So, what's looking good here, and what would you still stay away from?
I would pretty much stay away from the entire IT pack. I
Okay.
think what is happening is a technical rotation because the stocks had fallen, but the companies are good. They have, clean. Nearly all IT companies have clean balance sheets. They are all growing at 7, 8, 10%. Uh, decent margins. But the problem is not that. The problem is ultimately you are looking for growth, right? And that is something which is going to be difficult because US is going through a tough time, and that's the biggest market for these IT services companies. AI is going to be a major, sort of a factor in pricing of deals that is going to, happen. It's already, putting a lot of pricing pressure because the clients want, clients know that the teams are using AI for coding, etc., and they are insisting that they do. So a lot of productivity gains have to be passed through. So ultimately, I think IT services companies over the next 2 to 3 years will have to rethink their model. The simple model of uh, headcount based pricing is not going to work too much more. So ultimately, there will evolve some other model, which will I don't know what it's going to be right now, but I don't expect IT companies to do fantastically well over the next 1 to 2 years from a business perspective.
Okay, so select pharma, but IT is probably avoidable at this point in time, is what the view is. The third defensive play, FMCG, how are you placed on that, especially after ITC numbers that we have seen, even though ITC is much larger than just only FMCG player. But overall, what is the sense that you have, sir, on consumption, FMCG?
Again, FMCG, like we discussed last time, I'm not very positive because I think nationally the trend is that there is a lot of fragmentation within FMCG. So if you look at our own buying patterns,
Yeah,
it's not that we are only buying from these large listed players in these large brands.
yeah.
Because what was these brands about? If you look at an ITC or a Hindustan Unilever or Nestle, their biggest moat was their distribution. And today, with quick commerce, with e-commerce, large part of this distribution actually has been disrupted. So you see a lot of, local brands, D2C brands who are actually doing well, right? So what we see as, uh, you know, uh, sort of degrowth or flat sales of these FMCG companies is actually getting, sort of compensated by the growth in these smaller brands, right? So a large part is shifting towards that. So I'm not very positive on FMCG per se, but if I look at consumption as a basket, right?
Yeah,
So
yeah.
consumption as a basket definitely looks much more interesting because multiple triggers are happening, right? There are people, tax benefits are starting to flow through to people's paychecks. Uh, so ultimately, these things are going to boost some amount of discretionary spending. So that where that goes to is where you really need to focus on.
Yeah, I did also see your tweets. That was largely on the consumer electronics space. LG, that's going to be coming out with the IPO. Of course, everybody is waiting out for that too. Consumer durables, what is it that you attracts you at this point?
See, I think I was just going through the LG DRHP. Very interesting read because if I look at the penetration of appliances, large, small appliances in India, it is very very low. Other than practically mobile phones, we are not penetrated at a household level on pretty much. I mean, if you look at maybe TVs, mobile phones are the two which is there. But if you look at refrigerators, ACs, microwaves, even water heaters, water purifiers, that entire space, I think there is huge potential for growth, and people are slowly, actually beginning to buy these things. I am speaking to a couple of managements, and they're saying that uh, in tier 3, tier 4 towns, people are buying ACs before they have refrigerators. Now that is something which people like us who are in cities, we probably cannot really understand, right? I mean, normal evolution of a customer is, somebody would have a
Yes.
refrigerator first, then maybe some other things, and AC used to be a luxury kind of an item.
Luxury, correct.
But today, AC is no longer a luxury item. People are buying ACs uh, because it's become a necessity because of climate change or the change in temperature, whatever that we are seeing.
Absolutely. Any of the new IPOs that are coming in, sir, since we're talking about the upcoming IPOs, we had Borana, Bellrise today is ending. Now we have, going forward from here, Aegis subsidiaries coming up. We have even Leela Hotels, Sklos coming up with the IPO as well. Anything that looks interesting to you within the next 5-6 IPOs that are coming in?
I have a very simple policy to not look at IPOs unless they have been listed for 6 months. And the reason that I don't look at IPOs is, it might sound a little bit cynical, is that there is a lot of window dressing that happens with the financial numbers of a company, so that it looks good during IPO. So it takes a couple of quarters for any kind of window dressing to sort of wear off, and then you see the actual numbers and actual performance. And the way I think is, if you are really if you're buying a really great business, you might as well wait and see how it actually performs. Let them perform, let the management come in with their commentary, give it a couple of quarters, and then there's no harm in buying an HDFC Bank 6 months after its IPO. If you want to, if it's a great business and you can hold on to it for 20 years, why do you have to apply for an IPO?
Okay, that's point taken. So tell me, what do you think about names like Honsas Consumer? Now they have many such quarters that have come out with the earnings. Finally, some green. We are seeing some double-digit gains, 14-15% odd after the earnings this time. Are things finally taking shape as far as Honsas is concerned? Now 20% circuit now.
Yeah, so exactly, the point. So this Honasa, you look at a lot of these companies. You look at Zomato, Car Trade, Policy
Delivery.
Bazaar, uh, delivery. So this precisely, uh, you know, underscores the point I just made, right? So if you give it some time, understand the business, let the initial part of the whether you call it window dressing, whether you call it aggressive accounting, etc., go off, and then you see the actual business metrics. And I think a lot of these businesses are good businesses. If you look at Honasa, Mama is a decent brand, right? So will it perform well? Will it be able to compete with a Unilever and others? That is a business decision, that you have to, sort of evaluate. But the but now is a good time to actually sit and evaluate to see if this business is worth buying and holding on for some time, right? It was not so a year earlier.
Fair point. Do you also have some sense on Eternal, sir? Now we're seeing, inclusions, exclusions happening on MSCI. There's also this cap on foreign ownership now that's in place. So anything of those decisions that will impact the stock price, sir, on Zomato?
So Zomato, I think, see, fundamentally, they both Swiggy and Zomato, right? I mean, Swiggy also
Sure.
at some point in time will come in with their
Yes.
numbers. Uh, so they have a business which is not very easy to set up afresh. So if somebody wants to do it afresh, it's not very easy to do. So in that sense, they do have some kind of a competitive advantage. the economics of the business is extremely tough. The entire move that we had in Zomato, now eternal, I don't know how eternal it is going to be, but at least, uh, the entire run was because of their quick commerce, right? Blinkit. And the promise, although it's losing money there.
Yes.
So you are investing in Zomato slash Eternal with some kind of hope that it is going to be able to make its quick commerce profitable. Now that is a call that again that's a decision point that you have to figure out whether it is going to be profitable or not. In my opinion, it will be profitable, right? At some point it may not be today, it may be tomorrow, because the convenience it provides is phenomenal.
Yes.
And I've been a user at least for last year, and it is very habit for me, right?
Yes. Yes.
So slowly it will start from tier one cities, and it will then slowly, sort of percolate across the country. And just like food delivery has become profitable, I think quick commerce will also get profitable. So if you have a fairly long-term horizon, you might want to,
Got it.
you
Uh,
know,
Yeah, I think we'll try and connect back. I think there was some audio disruption. We'll quickly look at the markets and we'll get back to our conversation with Mr. Basu Malik. He's with us now back again. Apart from what we're discussing, is there any other sector that is looking promising to you from here on? Are you looking again at maybe defense or railways?
defense looks promising from the medium to long term. I think short term, you want to be cautious because it's run up too fast. There's too many stories, and there is a lot of recency effect because of our, war or this thing with Pakistan. So I think that has boosted sentiments. People have seen that it is, something where the government is going to spend money, but I think the run up has been too fast. Uh, it, so you might want to see some of the stocks cool off, but medium to long term, again, I think globally there is going to be a huge pickup in defense spending, largely led by Europe, uh, especially East Europe, West Europe, both, and also countries like India. Uh, Obviously, we'll have to, sort of dramatically increase our focus on defense. I'm not saying spending, because the spending pattern will change probably. Now, what we've seen both in Russia, Ukraine, and in the India-Pakistan war is that the nature of warfare is changing. We are more reliant on, air strikes, drones,
Yes, yes,
etc., which are
yes,
lower priced than flying actually a large combat aircraft.
correct.
So
Absolutely.
the spend may not go up, but at least the focus on modern warfare, defense is going to be definitely there.
How would you look at names like Idea Forge? So far, the stock price or earnings momentum had been lagging, but from the time that we've seen in this recent conflict, some drones were also used, and Idea Forge did come out with their statements on the front. Do you think these companies like this will be able to probably catch on to a few fresh order flows coming in now?
I'm not very sure if Idea Forge is really into combat drones. I've not studied it well enough to
Sure,
comment.
sure.
But I mean, if any company who's doing work on missiles, on combat drones, unmanned vehicles, etc. So radar, sonar, these kinds of areas are actually going to be more, sort of in the limelight.
Okay. Let's also discuss a little bit on, the capital markets related story, sir. A lot is buzzing, and at this point in time, we are hearing about NSDL IPO, we are hearing about NSE IPO. Then there is also this moving part that NSE's expiry day could be shifted, as SEBI chairperson did mention that consultation paper will be out on that soon. So we are yet awaiting for that. But on the IPO, he did drop some hints as far as that how things are work in progress, and we could be probably seeing once issues are resolved an IPO coming in. So how do you navigate through these big IPOs coming in from the capital market story? Already this has been one of the favorite themes from last 1 or 2 years for investors. How would you look at it, sir?
So I'll answer your question in two parts. One is NSE IPO. I've been hearing for the last decade that it will come next quarter, next 6 months, whatever. It's never happened, and I think as and when it happens, I'm sure it will happen sometime. It will be good for the country, because my theory has always been that the more diverse the companies that come into the markets, it's better for us in the longer term. You may not want to buy it, somebody like me, I will not buy it on day one, but it gives you an option after a year, 2 years to, buy into good businesses. So obviously, the more diverse, the better companies that come to the market, it is good for us. So, like CDSL is listed, if NSDL comes, it's good. Similarly, BSE is listed, MCX is listed, if NSE comes. NSE is by far the largest thing. So it's going to be good for the markets, and obviously, it's going to be good for investors because they'll have a broader choice. Now, the other part of the capital markets is the entire AMC, wealth management, broking, distribution kind of businesses. And I think that is a space where, uh, it's a very, very long-term, uh, great story for India. Because now we are into a situation where the young people who are getting into the workforce are not going and putting their money in FDs or in, PPF and stuff like that. They are actually coming to the capital markets, doing
Yes.
mutual fund SIPs. So uh, the mutual funds, the insurance companies, the wealth management companies, those actually I think are a decadal story for us.
Absolutely. Now, 3 minutes to go before we shut shop. Last question to you, Mr. Basmalik. When we come to talk about the markets, what are the chances that you are penciling in that this ongoing recovery can actually help us reach the erstwhile highs of 26,277? Or do you think we are probably going to be very range bound, very volatile, and it may just pan out to be a year like that?
Will probably be range bound, like I said, till end of June, maybe July.
Yeah.
End
Yeah.
of the year, I would be expecting, my personal expectation is will be higher than the previous highs.
Oh, okay. So we can cross the erstwhile high of
I, I would I
26,277
would I
by the
would think
end.
so. Yes.
Okay, wonderful. So things may actually get on track after June, July, once the tariff things and probably the 90-day pause situations clear up, and then we could be probably on our own. All right, always a pleasure to host you, sir, and to listen to your wonderful insights. Good to have you with us. Hope you have a fantastic weekend ahead, and we'll see you soon on another edition of Market Today. Good to be with you, sir.
Thank you. Thanks a lot.
All right, 24,850 viewers. We are 240 points higher, so it's panned out to be a good Friday, as we actually can say. FMCG stocks are the ones that are rallying the most, with the index now up 1.5%. And we can also see private banks up now over 1%, financial services jumping, IT, banks, those are the heavyweight spaces that are contributing. Only Pharma, about 0.4% of a lower tick that we can see, and of course India VIX, that's down by 0.6%. Top movers on the Nifty, you have Eternal, that's 3.6% higher. HDFC Life is moving up. Geo Financials, Power Grid Corporation is another one that's moving up. But on the downside, you have just about 2 or 3 stocks that are down. Sun Pharma, Grasim, Bharti Airtel and BEL, which is now flattened out, by the way, seeing some profits being taken off. PSU stocks, you have BHEL, that's up by 3% today. Power Grid, that's up 2.5%. Oil India, NMDC, BPCL, oil and gas story, energy basket also buzzing. On the F&O space, you have Angel One that's up by 5.5%, Hindustan Copper that's up, Max Financial Services, those are the pockets that are buzzing. Whereas on the downside, you have Concor, Sun Pharma, GMR Airports Infra, all of these stocks that are seeing some cuts take place at this point in time. The screen is frozen, 24,849, just a point shy of 24,850 is where we are ending at, but comfortable, almost 1% kind of a gain, with broader markets also supporting and most of the sectors also pulling up in trade. So looks like we are going to be having great weekend ahead. With that, viewers, we wrap up this special coverage on markets for the day, but do stay tuned, as beyond the markets coverage, there's so much more that you need to track on the world of business and economics. Stay tuned.
You have a Pakistani leadership, especially their army chief, who's very driven by extreme religious outlook.
Jai Shankar naming and shaming the Pakistan army chief for the